Hello everyone, my name is Sriram Iyer. I'm an analyst at the commodity research desk at Reliance Securities. Welcome everyone to this week's gold podcast. So this was an interesting week for gold and silver. Prices initially crashed to a 3-month low, especially gold fell to its 3-month low in the earlier part of half of the week. As the dollar rebounded, as investors increased bets that this week's US jobs number would come in very strong, which could cement the Fed's recent hawkish stance. A poll has forecast a growth of 690,000 jobs in the month of June to add to May's expansion of 559,000 jobs. Meanwhile, other data was also upbeat this week. US consumer confidence jumps to its highest in nearly 1.5 years in the month of June, while jobless claims also fell this week, which also capped the upside in gold prices. However, after the brief fall, both gold and silver rebounded from the lows of the week in the latter half of the week, supported primarily by opportunistic buying. Some bargain hunting was witnessed and unwinding on some shorts ahead of the non-farm payroll data on Friday. So the short-term trend, looking ahead, the short-term trend suggests that more weakness for prices could be expected, as some investors and most investors in fact are expecting better than expected jobs data number out tonight, which could increase calls for higher interest rates from the US Federal Reserve. This would lead to a very strong dollar going forward in the short term, which could weigh on sentiments on the bullion side of things. However, labor market disappointment tonight will provide support to the short-term bulls, to the short-term bulls of the bullions. Probably in the next couple of weeks, we could see market rebounding from the lows of the week at 1750. On the other hand, the uncertainty of the monetary policy of the Federal Reserve in the medium term to longer term horizon in regards to their inflation forecast and timeline to taper and raise rates could continue to weigh heavily on some investors' minds. So investors could continue to remain away from the markets in the medium term to long term horizon. We believe that unless a clear path from the Fed, probably in the Jackson Hole Symposium, which is in August, if there is a clear path from the Fed, we could see some return to activity in the bullion markets. Otherwise, markets we could see investors remain away from the markets for some time going forward. The economic calendar front, on the economic calendar is very thin next week with only ISM non-manufacturing PMI number. So everything depends on today's non-farm payroll number for the short-term outlook. Across the Atlantic, we have the UK's PMI number along with Germany's economic sentiment for the month of July, which could have a very small impact on markets going forward. On the charts, we feel that the major trigger point for today's session and probably in the short term will come from the jobs number. So a pivotal support remains at 1750 and 1760 levels, and a break below will pull prices to 1720. Some bargain hunting can be seen at 1720 levels for the international side of things. At the same time, if the payroll numbers are not in expected lines, we could see gold move towards the initially 1790 levels, which is a major hurdle for the market. But if 1790 is taken out going forward, we can see markets test 1825 as well in the short term, probably next week is possible. So all eyes will be on that jobs number in the evening session. On the domestic front, MCX range for in the short term will be from 46,600 to 47,700, and either side breaks will provide us fresh ranges for the domestic gold markets. So thank you for listening. Have a pleasant day and have a pleasant week ahead. Thank you.